Hello and welcome to CPA Australia's webinar on the 2021-22 Australian Federal Budget. I'm Dr. Jane Rennie, General Manager External Affairs at CPA Australia. I'd like to take a moment to acknowledge the traditional owners of the land from around Australia and pay my respects to elders past, present and emerging. I'd also like to acknowledge any Aboriginal and Torres Strait Islander people who may be joining us for this event today. We have people from all around Australia for today's webinar, and among them are CPA Australia Board Directors Dale Pinto, who joins us from Western Australia, and Louise Cox, who joins us from Queensland. Thank you for joining us, Dale and Louise. In today's webinar, we'll examine all the developments, issues and outcomes from last night's budget. Joining me to provide expert commentary and analysis are CPA Australia Senior Manager Taxation Policy, Eleanor Cassipides, and Senior Manager Business and Investment Policy, Gavin Ord. Eleanor, Gavin, welcome. Our listeners today are encouraged to ask questions using the chat box on your screen, and we'll try to answer as many as we can. Before I hand over to our two experts, here's a quick recap of CPA Australia's pre-budget submission. We called on the government to pursue expansionary fiscal policies focused on short-term economic recovery, longer-term economic transformation and environmental sustainability. In a submission with 29 recommendations, we urged the government to focus on supporting otherwise viable businesses that continue to be affected by COVID-19, supporting individuals affected by the economic fallout from COVID-19, promoting new growth opportunities and addressing the impacts of climate change. I'll hand over to Gavin now to kick off our analysis, but Gavin, before getting into the detail, to what extent did the government deliver an expansionary budget and why was this important right now?
Thank you, Jane, and welcome everybody to today's webinar. So yes, the government did deliver an expansionary budget. We're seeing now forecast deficit for the next financial year, $106 billion, $107 billion. So that is definitely an expansionary budget. For the current fiscal year, which ends in June, we're looking at a budget deficit of $161 billion. Now that's actually a much better deficit than they originally forecast. So to cast your mind back 6 months, we actually had the last budget. Back then, the government forecast a $213 billion deficit. So in terms of the financial position, you can say that the government's about just over $50 billion better off than where they thought they would be at this time. There's a number of factors behind that. The government outgoings are down because unemployment rate is lower than forecast. And also the government revenue is also up. Tax receipts up, particularly in the corporate tax area. That's in large part due to iron ore prices being at a record high. Also, there's been a number of other things which the government's taken into this budget, which has shown that the economy is doing much better than expected. So just last month, 105,000 people dropped off income support. So that's a very high number of people who dropped off income support. Business confidence is up. So the NAB recently released its business confidence index, and business confidence for Australian businesses is at a almost all-time high. Also yesterday, the Australian Bureau of Statistics released its fortnightly estimates on payroll jobs. So the number of jobs that has been lost since the end of JobKeeper is actually not transpiring as thought. Treasury estimated that we might lose 100 to 150,000 jobs after JobKeeper expired. The stats from the ABS point to that actually the number of jobs in Australia has actually increased 1.2% since JobKeeper expired. And that obviously means that some businesses are doing it tough in particular areas, but overall, there's still employment growth, even though JobKeeper's come off. I mentioned iron ore prices. Iron ore prices are at a record high. There are estimates that iron ore price is now at around about $230 a tonne. That's making the federal government budget about $20 billion better off. Western Australia is obviously a big winner out of this, and Western Australian governments, the forecast is that they will actually be in a surplus on the back of royalties from iron ore. Whether that price can be sustained is probably highly unlikely. Some of the reasons behind that price being so high include strong demand from China and also supply problems from Brazil with their COVID crisis there. Once Brazil starts to overcome that COVID crisis, supply will start to pick up from Brazil, and we should see that iron ore price come down. Interest rates remain at an all-time low, 0.1%, the official interest rate, and also the RBA, the Reserve Bank, is still buying government bonds to push the yield down, the cost of that bond down to 0.1%. So the cost of borrowing for government has never been so cheap as well. The Australian unemployment rate, as I said before, is better than expected, at 5.6% as at March, and the forecasts were actually around about 7%. But also part of the scene setting is Australia's borders remain closed, and will do so until 2022. We don't know when in 2022 that might start to reopen. So in a short summary, the government's position, the budget position is far better than they expected, based on a much stronger economy than they expected. And we look at some of the economic and fiscal indicators. So debt is obviously on the way up. When you're running big budget deficits, an expansionary budget, debt obviously will climb. I spoke about the deficits before. Real GDP, so GDP growth, we're looking at a rebound at 4.25% this year, and then a sort of a tapering off of the growth in 2022-23. The unemployment rate is expected to be around 5% for next financial year, falling to 4.75% the year after that. That's important because the Treasurer, Frydenberg, has said that the government will continue to run expansionary fiscal policy until the unemployment rate has a 4 in front of it, to quote the Treasurer. So if you take this, if those projections come out and the Reserve Bank has a 4.5% interest rate, we should start to see that the next budget will be a more of a consolidation budget, and we might see some cutting. So this could be the last of the big spending budgets, the big largesse. I included there the wage price index because wages growth has been very low in Australia for quite some time. And if you look at that, it's sort of starting to pick up. But what I didn't include in that particular graph is inflation. And while wages look like they might grow 2.25% in 2022-23, the inflation is also 2.25%. So there's actually no real wages growth being forecast over the next 2 to 3 years. The government's hope is that unemployment rate of under 5% will actually lead to a pickup in wages growth. This slide here shows the deficit, and there are, to quote somebody from the last budget, there are deficits as far as the eye could see. So we're looking at deficits way out into next decade. So, and that hasn't changed from last budget to this budget. Just to re-emphasise again, the red line in that graph, and hopefully you can see the red line shows what the estimates were in the last budget. You can see here graphically how much better off the government is here. So the deficit was around about 11% of GDP. It's now forecast to be around 8% this year. Now, a budget deficit of around 1% of GDP is not bad, particularly most advanced countries are operating at a much higher deficit. But deficits as far as the eye can see. This slide here is about net debt to GDP. You can see the almost exponential increase in net debt from the start of the pandemic. So it grew from just under 20%, or just around 20%, right up to around about 45% of GDP in a matter of 18 months. So government took on a lot of debt to pay for JobKeeper and other stimulus. So that was entirely appropriate and the right steps to take. Those steps really protected the economy from a much worse situation. But yeah, net debt will remain high for some time. But again, if you compare it to other similar advanced economies, Australia's net debt is very much lower. If you look at UK, US, Japan, they're well over 100%. Japan, I think, is up around 200% of net debt. This was these two quotes were extracted from the budget papers last night, and I think they're a nice little juxtaposition, for want of a better word, showing the positivity of the first statement. The Australian economy is recovering from the COVID-19 recession and is surpassing expectations, which is true. However, while the outlook is positive, considerable risks remain, and that's very true. COVID is very much still with us. At any point in time, there could be another lockdown, short-term or long-term. So there are still considerable risks. Our borders remain closed. We can't attract international tourists or international students, and that's having a bad impact on sectors of the tourism, parts of the tourism sector, and definitely having a negative impact on the education sector. Other risks which are not mentioned here include some of the geopolitical tensions, the rising tensions between Australia and China, how that might manifest itself within trade. We'll now move on. That was just a quick summary of what the budget is looking like there. We'll move on to some of the key measures in the budget. And we'll just run through these with a little bit and then go into a more detailed discussion. So there's a somewhat large investment in the digital economy in this budget, 1.2 billion, that's over 6 years. But I think the major concern for us is that of that 1.2 billion, only $28 million goes to small business to help them with their digitalisation. Do you want to add anything to that, Alana?
There's so much, isn't there? So I think for especially those in public practice, we all see, those transformational programs like MyGov ID, you're seeing the director ID regime come in, and all of that requires infrastructure, it requires spending. And then that's just talking about what the ATO manages. You think about all the other government departments, and they're really conscious about making sure that service delivery becomes increasingly digital. So there's a lot of funding there. But we were talking about, and I know we have something on infrastructure, but it's about building soft infrastructure. So rather than pouring money into roads and things like that, it's actually about your digital infrastructure, your information superhighways, and all of those cliched phrases. But it is the government taking the lead and I think laying the groundwork so that Australians and businesses can participate more easily.
Yeah, I agree. We'll go into a bit of a discussion about super, but the key item coming out of super was the removal of the $450 threshold for SG, and some of the other ones are minor. Women's economic security. Obviously, the government made a big thing of this in this budget for obvious reasons. A big part of that is the childcare subsidy. Taxation, we'll go into more detail, but the Lamito extension is the biggest cost thing in the tax side of the budget. So that's more of a stimulus payment, and that's meant to help stimulate the economy. Health. There's obviously money around COVID-19 and the vaccine rollout, but also a much stronger focus on mental health. And one thing that's taught us over the last 12 months is how important mental health is to all of us and to our clients. Aged care was a centrepiece of the budget, with a very large spend on aged care. Whether that's sufficient, well, obviously time will tell, but this was the government's response to the Aged Care Royal Commission. Jobs growth, there's been some money to support boosting skills to the future workforce, but obviously many businesses are suffering from skill shortages at the moment. And there's money for infrastructure, as Eleanor said, the hard infrastructure as well. Any other observations you'd add?
I think, you know, we've made a few observations. We recorded a podcast this morning, so a bit of a plug. We should have it up later on today, so have a listen to that. We go into a few more thought bubbles, but we were saying, you know, this is a good budget. It covers a lot of areas that you'd expect the government to cover. It is expansionary. And I think that as we go through some of the new measures that they've announced, they are experimenting with things and they are listening, I think, to some of the reviews and the recommendations, the policy advisors. And I think that from a policy and advocacy point of view, it's been a really interesting 12 months that we've been involved, because we've never been so connected, I think, with government. And it is, you know, you lay this groundwork over decades, but when it comes to the crunch and you really need to lean on trusted relationships, I think that this is reflected in the budget. While it might not be everything that people wanted, I haven't observed that people are singularly unhappy with anything.
Yeah, I would agree. I think it's the right budget for the time. It's definitely the right policy settings.
So, for those of you who subscribed to Tax News late or early this morning, you would have got some links. For those that haven't read all of it, Kimberly has popped in the chat some links to our resources. I'll be talking through our report that we've put up online, which is a summary of the tax and superannuation measures. I will acknowledge it's not everything, and so as you go through the budget paper, number 2, there are sort of complementary parts of these measures that work in conjunction. So I'll try to cover as much as possible, but obviously we'll take questions. And if there's anything that we haven't covered, we can get back to you on notice. We'll take them on notice. So with personal taxes, I don't think it was any surprise, but it's nice to have confirmation. Low and middle income tax offset has been extended, as has the low income tax offset. No changes, so it's basically business as usual. So in terms of advice and how you run things, it is what it is. I know that there was a rush to get refunds last income year, so lots of early lodged returns, and we wouldn't expect any different this year. The $250 threshold for self-education deduction, I think when they did the consultation on self-education deductions a few months ago, that was the one thing that everybody agreed on. So it's a nice, easy win for the government to take that away. There is also confirmation, you know, we called for bringing forward stage 3 personal income tax cuts. It's not a surprise that they haven't, but once again, a lot of this is just confirming what we have suspected. Two of the interesting things, individual residency tests. So obviously the Board of Tax has done a lot of work on this in the past years, and I feel like their reports have been somewhat languishing on the shelves. So the government's picked up their recommendations. What isn't quite clear is whether this is only for inbound or whether it also applies to outbound, because obviously that's going to have different revenue implications for government. But having said that, this idea of a bright line test, and the budget papers also confirmed the secondary test that was proposed by the Board of Tax would also be included in any reforms. So I think that really, as part of that consultation process, it's not as if government's just picked it up and done it. This has actually had a lot of considered thought. It was a self-initiated review by the Board of Tax, and simplification, generally speaking, is a better thing, particularly in the space of residency. The issues also obviously hit home hard because of COVID, where people have been stuck, but also the change in how we work and the fact that you no longer have to really be resident in the country for the business that you work for starts to really challenge those established residency rules around individuals. It was also introduced in the context of attracting global talent, which is why maybe it is just for inbounds. And again, it's about removing some of those blockers to having, you know, highly talented entrepreneurial people from offshore coming in and helping Australian businesses build up, you know, a base that hopefully one day will rival Silicon Valley, or at least, you know, will come up with the next Cochlear or something like that. And that really then folds into employee share schemes. So they had this taxing point that when you left the employment, you had to pay tax. This now removes it. It was essentially artificial. And again, it's around trying to encourage startups, businesses that don't have cash flow. How can they attract really talented people and at least give them some discounts or some shares while they're there, with the prospect of future gains if they manage to pull it off? So those are the main ones for personal taxes, and we can move through to the major business ones. Again, I don't think there were any surprises with the extension of temporary full expensing and loss carryback. I sort of think, well, how long is temporary when it's going on for years and years? Certainly for your smaller businesses, there is I think, hopefully there will be data collected to see whether or not you need to ever get rid of full expensing for them. Obviously, when you're getting up to your $5 billion turnover, perhaps it might be a bit generous to allow them to fully expense everything. But yeah, there's this idea that surely you can then use this information to calibrate the settings going forward. So we'll be watching that with interest. And tax stats, which I just love. It'll be interesting to see the claims and the impact on taxable income over these particular years, and to see what the depreciation deductions look like there. The loss carryback is an interesting one, because I think that really, because the Australian economy has rebounded so well, the losses presumably will very much be trapped in last year and this income year. And how many years, if you're carrying it back, if you were previously profitable, how much do you really need to extend it? But again, it'll be interesting to see the uptake and the application of that. Intangible assets depreciation and the option to self-assess. This has been something that they've had a few goes at, so let's see if it gets through this time. But given the rate of change and development and how quickly things can become obsolete, it does make sense. I think it'll be interesting to see whether the Commissioner comes in and says, we don't agree with your self-assessment. And I think they're going to have to skill themselves up in all sorts of intangible asset issues and valuation problems to challenge some of these claims. And that's a known issue. We've known about it in, you know, transfer pricing and things for quite a while. IP is a really difficult space. There's also, in line with the individual side, they have announced that there will be corporate tax residency rule consultation and the extension of that to trusts and corporate limited partnerships. So again, there's a lot of noise, and it does have a lot of effects on other kinds of provisions. So it's good to have that conversation. I'm not going to profess to be an expert on corporate tax residency, but the challenge is, if you make it a simple rule, it can have unintended consequences, and if you make it complex and adaptable to everybody, then that brings in complexity and some uncertainty. I've seen Jane pop up on the screen, so I'm going to throw to her for a question, I think.
Indeed, Eleanor, and we've had a question from one of our listeners who's asked, is the 183-day residency test in a financial year or a calendar year?
Again, it's not clear. I know that the Board of Tax highlighted that as an issue. Is it going to be within an income year? Is it an average? I really think that we have to see. I might be proven wrong if I look at my budget papers, but I won't. But I think that all of those issues, it has to be fair and it has to make sense, you know, and you don't want people timing their arrival and departure based on your income year. You want it to be timed based on when they're needed in Australia and when they should work. So I would expect all of these to go to consultation. I would suspect that the government will listen to the Board of Tax, but it will really take Treasury to do a bit more than the high-level costings that they've done so far to really get that clarity. We would probably say it shouldn't be. I mean, there are bright line tests and there are bright line tests, but we would say there should be some sort of, you know, reasonableness about it. What is interesting as well is the ATO started to data match departures and arrivals into Australia. So this idea of residency and things, the more automated it can become and the more that the government knows who's in the country and out of the country, it might actually be something that they use an algorithm to say, through this bright line test, we know when you came, we know when you left, you are either a resident or not. So that'll be an interesting thing to look at. Patent boxes. Never thought this would happen in Australia. The OECD obviously has a lot of talk about patent boxes. I think it's not a bad idea. It's certainly something that our neighbours overseas and close tax competitors do have. For me, I think it's a good start to have it to the medical and biotech sectors, but why not go broader? You know, we want an entrepreneurial and innovative society and economic environment, but I think what the government should do is try it with that particular sector, but then have a vision to expand it out if it's effective. There are two things around the administration, the AAT. So at the moment with the debt recovery reaction, you can't go to the AAT, you have to go to the courts. So you can dispute an assessment which goes and gets heard at the AAT, but if the ATO starts to collect on that, you've got to go to the courts to get them to hold off for a bit. What I'd like to see come out of this is that it goes to the AAT, you dispute the amended assessment, but the same member, you can also lodge a request to look at the debt. And what would be very efficient and cheaper for advisors, lawyers and taxpayers is that the member would be able to manage the case, both the amended assessment and the dispute over that, as well as the debt collection activities. Obviously with the ATO increasing its use and becoming a little bit stronger now with its use of garnishee notices, you've got all sorts of things in the Phoenix space. We need to find efficiencies through the court system and make things manageable for taxpayers and their advisors. We also have foreign investors. So the ATO is going to get some money to help some of these transactions that come through. So I think it'll be a mix of, those FIRB assessments for foreign investors, probably things, just information around if you're buying residential property, but it also does talk about APAs, advanced pricing agreements and things like that being done in a quite streamlined and fast-tracked manner. So those are the main ones. I know that we've got others around on the next slide. We've got more. So we've got 30% digital games tax offset. Yeah, whoever's up to make the next fortnight, go for it. It's not a lot of money that they've costed for it, but it's a $250 billion global industry. So let's get us a piece and do it, but not for gambling, not for gambling. The excise refund cap is about equalising with wet. My personal view is that I don't even know why we still have two systems anymore. I really think they need to be unified and just consistent, but that's a discussion for another day. A review of the venture capital tax concessions will be undertaken in 2021. Australia's venture capital market is not particularly strong, particularly when you compare it with overseas in the US and things. So I guess it will be that question around, are they effective? The amount that they cost, is it actually achieving the outcomes? Have we actually got a proper venture capital industry yet? And what else would need to be done? So I don't think there's any details really. So when it happens, we will be involved. So any members who are interested, we'd love to hear your thoughts. Corporate collective investment vehicles, sort of going up to the bigger end of the market. TOFA regime, it's about portfolio treatment of hedging Forex gains and losses. And then we've got some help for smaller businesses and primary producers affected by storms and floods. I think the government is really interested in regional and rural Australia. They've done the effectiveness of the farm management deposit scheme. So, there's bits and pieces of activity in that space. So hopefully our farmers and rural communities will be supported through all this change and obviously with climate change here. I was going to say on the horizon, but it's here. Some not-for-profit reporting stuff. I think it's always good for people who give to charity to know what's happening with it. So that again is just about transparency. And the OBU changes were announced because the OECD wrapped us over the knuckles because of them. So that's that'll go through. Very quickly, with superannuation, the $450 minimum income threshold for the SG will be abolished. I think, you know, at a really principled level, that's a really, really good thing. I don't think anyone disagrees. The challenge, I think, for practitioners and for businesses that have employees in that bucket is, what does that mean? How much will it cost them? What are their exposures to risks around SG, Part 7 penalties? I always get my divisions and my parts mixed up. So there are some practical implementation issues, and we would probably look to reignite that conversation about the SG penalty regime and its impacts on small business and how punitive it is. Jane.
And Eleanor, on this one, we've had a question. Will there be any exemptions with casuals and employees under 18 years old?
Let's give it a go. We'll find out. So I think because these are announcements, the devil is always in the detail. You always assume that the government will start with just take it off. And then people will come forward and say, but this is the effect on my small business, or this is the difficulty in whatever it might be. And I think, again, when it comes to that consultation, we do appreciate hearing from members, because real life stories, so Gavin really does a lot of work with COSBOA in the small business space. I do tax and super, as far as it goes with the ATO, with my colleague Rich Webb. We need to hear those stories so we can give those people a voice and really understand the practical impacts. So I think it's a watch this space type of thing.
I just say, in the budget papers, there's no talk of exemption. So, but quite right, Eleanor, what's in the budget papers doesn't necessarily translate to legislation. So let's see what it actually transpires. But at this point in time, there's no talk of exemption.
So the devil's in the detail, and budget announcements don't have details. And then we've got the First Home Super Saver Scheme. There are other home-related initiatives in the budget paper that we haven't covered and probably won't cover today, but those are like the First Home Deposit Scheme and some other initiatives. I think everybody acknowledges it's so hard to get into the residential housing market. The uptake of this Super Saver Scheme has been really, really low, and its predecessors, the uptake was really, really low for a variety of reasons. Whether or not increasing this amount is going to do anything or not. Probably though, like as an advisor, if you have someone come to you and say, you know, I'm 27, I'm trying to save, what can I do? Without necessarily going into financial planning and all the rules around what you can and can't say, I think it's good to raise their awareness of what might be available and what might be a better or more effective savings vehicle for them to consider because of the tax benefits that it brings. The work test for people between 67 and 74 for super will be abolished. And Jane, I saw you pop up on the screen, so
We've had a couple of questions about when some of these announcements will be effective from. So when will the work test be abolished from, and when will the super guarantee minimum threshold be abolished from?
Let me look at my papers and flip to the super.
So the super guarantee, so it looks like that'll be from 1 July 2022.
Yep. And similarly for the work test. I mean, the truth is that really July 2021, 1st of July 2021 is only a few weeks away. It would be impossible for them, unless they've got the legislation ready to go. But you still have to do exposure drafts. You still have to get it tabled in Parliament. You know, there's a reticence to go retrospective. So in reality, most of these will either be from Royal Assent or from the next income year, 1st July 2022, which I don't think is unreasonable. And legacy retirement products will be removed, residency requirements will be changed. So I think, you know, there's a lot of different little things in super that probably have got different aspects that they're addressing of the super system. And they will also presumably go through the same sort of consultation process that we'd expect the tax measures to go through. Digital transformation, over to you, Gavin.
Thanks, Eleanor. So we spoke about this at the start. The government's announced $1.2 billion over 6 years to invest in digital transformation. Most of that money goes towards building up the government's own infrastructure, which is important. We're very much supportive of some of those things, like improvements to MyGov, and we've seen before the modernising business registers, all very positive measures which should over time help ease the burden of dealing with government. But I think in terms of a missed opportunity, I definitely think the lack of investment in the small business capability to actually take advantage of the digital transformation. I think that's the missing ingredient. You can see there $13 million to access digital advice from something called ASBAS. Some of you may or may not have come across that. To give you some context, Singapore, a country which is about a quarter of the size of Australia, their similar program, they're spending $500 million, so $500 million. We're spending $20 million. Singapore's spending $500 million. MYOB came out with some research yesterday that if the government were to increase its investment into the small business digitisation, that could be repaid tenfold in terms of economic activity. We would say our own research points to something like that as well. E-invoicing is interesting. So we've come out and said we like e-invoicing, but not to mandate it at this stage. I think it's good that they're spending a bit of money to promote e-invoicing, which is really what we asked for. And you've done some work on e-invoicing there.
Yeah, I think it's a good idea. And what this signals is, up until now, it's almost been a choice. And change is really, really hard. But if you want value in a business, even if you're sort of towards the end and you want to sell it for your retirement or whatever, if you're not digitalized, if you're not investing in these systems and processes, all of a sudden your value really starts to decrease. And e-invoicing, I think, is one of those things that's scary until you do it. A lot of digital stuff is. And I think, it's a small step, but it's the right step. We will be at our public practice conference in Lorne having James O'Halloran talk to, some of the PEPAL stuff, because the ATO, a separate part of it, is actually going to support the rollout of a lot of this work. So I think that it's around how does government bring people on the journey, but increasingly the sense we get is the choice or the ability to choose to do this is running out. And how do we bring everybody on board, which is where the profession, it's so important, I think, as advisors, to support and encourage and role model a lot of these things and take advantage of it where you can as well. If you're sending out e-invoices to your clients, it starts to help them to realise, well, hey, this isn't such a bad thing.
Yeah, a few other things. So there's a bit of money for free advice to small business on cyber security. Again, $7 million is really not much. It won't really achieve that much, but it's really important. In terms of other things you might be interested in, so there's money towards developing solutions around interpreting and applying modern awards. This is something that's been initiated by the software companies, so Xero and others. And it's really interesting. And obviously it'll work if you use a system and you can rely upon it, a bit like a tax ruling, private ruling. So hopefully that's sort of in their mindset, that if you use that system, it means you can actually rely on it and you won't be up for any wage theft or anything like that.
I'm laughing because I think it's like when they say, oh, we're going to sort of systematize tax and AI will do it all. And I think my understanding of the award system is that it's like tax law. So it'll be really interesting to see what they come out with.
I don't know if I'm sharing stories out of school, but the original acronym for this was MAD, Modern Award Database. And I thought maybe that's not appropriate. But yeah, that was the original working title for this particular thing. And some more money for developing graduates in artificial intelligence and more money on artificial intelligence. There's a few other, there's a laundry list of things going on, but one thing I want to draw your attention to is lots of small little things, not really big things directly relevant to small business. So I think that's to us is the missing part of this particular piece. We talk about digital being a two-sided coin. It's not as if the government could build it and people will come, but you need to actually help people on that journey to using that technology. Is there anything else you want to add on digital transformation?
No, I think just there's a couple of references to cybersecurity, which we're always banging on about. But I do think, again, you need to build the software, you need to build the capability, but you also need to build the security. So I think it's good. Again, it's probably not enough because the risks of things going wrong are so costly. I'd like to have seen a little bit more about cybersecurity, to be honest. Women's economic security. So I think everybody has sort of got the message that this is about women in the budget, or at least it's a recognition by the government that it hasn't necessarily been overt or acknowledged in previous budgets. The main centerpiece is the childcare subsidy. So a lot of that, the billions of dollars are there. Having said that, though, when you work your way through the budget papers, there's sort of this quite holistic approach. So you're looking at family home guarantees. You've got initiatives around family, domestic and sexual violence. You've got leadership. I think there was something on STEM courses as well. I think investment in our legal system is also really important because the courts are so expensive and time consuming and stressful. So they're also looking at trying to streamline some of those family law aspects, which are sort of, they're looking at all the different factors that can lead to gender inequality or just family breakdowns and trying to make sure that they've got some policies across those spaces. Some people say it might not be enough, but at least it's a step in the right direction.
And anything that can be done to improve female participation rates will boost the economy. So female participation rates are about 61%. I think male participation rates are around 73, 74%. So we could boost female participation rates up closer to what is for the males, then there are huge economic benefits will flow from that.
Because we have to get unemployment down to with a 4 in front of it. So, yeah.
Aged care. So you would all heard that aged care is a very big part of this budget. This was in response to the Royal Commission to Aged Care. There's a lot of money put towards different initiatives. So you can see them there, $6.5 billion for 80 additional home care packages, 800 million for support for informal care. So it's not just about care in an aged care home, it's also care within the home as well. And it's also about improving the quality of that service. So money to help with the training of aged care providers and the staff within aged care providers as well. And there's also different funding models which will increase the funding for each resident by $10 per day. So this is obviously something we'll have to keep an eye on. Hopefully it leads to better outcomes for people in aged care. And it's something, as members, some of you would have clients in that bracket where you have to give some advice around aged care. Definitely take a bit more time to have a look at this package. Jobs growth. So we are hearing a lot from members of the struggle that their clients are having in attracting staff and keeping staff, and it's not necessarily skilled staff, it's also the unskilled staff. So, so anything to do, this package is actually developing skills that will help in the medium to long term, which is good, but there's still some immediate problems around staffing availability at this time, and with borders being closed, no backpackers, no international students coming in, some of those short-term staffing issues are going to remain, and we're not going to see too many ways to improve that over the short term. But I do note in the budget, the government announced that international students will be able to work full-time if they work in the tourism hospitality industry. So there are some steps trying to take to overcome that short-term skills and labour shortage, but I think it's going to remain fairly acute for some period of time. And there are lots of other issues around particularly regional areas, attracting people to work in the regional areas. We're seeing rent go up quite a lot in some of those regional areas. So the ability to attract someone into a low skilled job in a regional area is actually quite difficult because a lot of their income will be taken up in rent. So there's all sorts of issues there. Infrastructure, we won't go into that, but there's $15 billion in infrastructure spread throughout each of the states. You can all see that, and if you obviously look in your local newspapers, they will emphasise the various infrastructure projects that are going on. And that's the hard infrastructure.
We've got roads, lots of roads. Lots of
roads. Canberra Light Rail for people in Canberra, an extension of that. And some of it, like the Melbourne Intermodal Terminal, that's part of the Inland Rail from Melbourne to Brisbane. The environment, I think this is one area where the government the government strategy is to have technology deliver its policy objective, although the policy objective is not really clear. It's like net zero emissions by 2020 if possible. It's not really a clear goal. So there's, I think businesses would be, they would like a bit more clarity around the long-term policy objective of the government and the opposition, because I think this is a bit like super, it's intergenerational. Businesses need to make intergenerational investment decisions. So I think a little bit more bipartisanship around climate change, environment policy would help businesses in where to make investments and how to make investments.
I do think, though, a lot of jurisdictions sort of caught on a little while ago and started to realise there's money to be made.
Yeah.
And, you know, Australia's got amazing scientists. We've got great research facilities. And again, it's around that economic growth, because all that debt has to be paid for. So how do we get economic activity profits into Australia, keep the intellectual property and actually make it a moneymaker for us, with the obvious benefit that it helps the environment as well. So at least the government's starting to think in that direction. But you're right, like how do we make it into something that's sustainable?
Yeah, economically sustainable. I think we're a little bit behind the ball. I mean, China in particular has made huge investments in this area. So, and they've got the huge economies of scale, which can actually make some of their ideas profitable very quickly.
Be pointless for us to try and make better solar panels, or, you know, Europe does wind technology. Yeah. So where can Australia really make a difference?
Yeah. And we thought this is our views on the initial view on the budget. Maybe, Albert, what do you think?
Oh, look, I think we've sort of gone through everything in terms of holistically, no one's lost out too much. I mean, even NDIS, even though the government signalled their concerns about cost blowouts, they're still sort of investing money. Could they have done a bit more on certain things? Sure. You know, there's a lot of talk about where's the tax reform, where's the big idea and all of that. But I think at this point in time, stability and certainty is more necessary. A lot of us have come to accept the tax and super systems the way they are. We can navigate it. We want irritants out of the way, which is why things like the ESS, the patent box, things like that are probably not bad places to start. I think for the profession and for advisors, there is a broader conversation around trusts. In that middle market, your private wealth, your structures, how all of that is managed. And you know, you see a lot of it's going to go through the ATO and the courts rather than necessarily through legislation. There was no, I'm going to say it, nothing on Div 7A in this budget. You know, what's going on in that space. So I think the big scale tax reform needs the states. It needs risk. There might be structural impacts. I don't think we can, as a nation, can afford that at the moment. But could we have a bit more of a conversation and a bit more movement on areas that, you know, are, you know, we might not like the changes, but it's been signalled for so long. Someone just give us something that we can work with and start to have the conversation.
Yeah, agree. I think overall, I think our media releases spoke about mainly hits and some misses, and I think that's probably a good summary. Pretty much overall, a lot of good to reasonable things. Some of it's incremental. So you spoke about patent box. I mean, that's starting at medical and biotech. That's sort of incremental. If it works, maybe it gets expanded. Infrastructure spending, there might be more on that. Women's economic security, that might be the first down payment in future investment. So some of it's incremental, some of it's more. And yeah, overall, obviously, we're pointing out some of the areas we've got concerned, but overall, a very positive budget.
That's right. We're happy. Would love to know what you guys think. So what we might do is, if you do have any questions or even comments, please pop them in the chat or the Q&A box. Obviously, Gavin and I both work in the policy and advocacy team. So if you ever want to get in touch, share your thoughts or experiences, it's policy.advocacy@cpaaustralia.com.au. And please subscribe to Tax News, which comes out weekly, because we pop up there the things that the government's consulting on or legislation that's before Parliament. And with that, I'll hand back to you, Jane.
Thanks, Eleanor. Thanks, Gavin. We've got a couple of questions for you. One of our listeners has asked, any new infrastructure projects in association with Brisbane's bid for the Olympics?
Will there be an Olympics? Isn't that putting the cart before the horse a bit?
I mean, there was a statement that the government will work with the Queensland government on the bid, but that's it. So at this stage, no specific projects for that bid. And I think the decision's made 7 years out. So we'll probably know in 3 years whether Brisbane is actually the successful bidder. So yeah, it's a bit early to say, but I do know I did find something that there's $50 million for over 3 years for high performance sports to support high performance programs for Olympics and Paralympics. So there's an extra $50 million for our high performance sports people. So not a direct answer to the question, but that's the only reference to the Olympics in the actual budget papers.
Well, I've got another one looking ahead to the future for you. Any indication that the government is moving towards a digital currency?
The digital gold rush. No, not the Australian one. Although, it's a really interesting space, isn't it? Because, if you talked to me 5 years ago, I went, blockchain, Bitcoin, that's ridiculous. And now you've got Dogecoin, which is a meme, it's a joke, and it actually has value. And again, it's this transformational change in what do people perceive. And I think it also reflects a lack of trust sometimes in monetary policy. So the risk of inflation, governments borrowing this debt, printing off the money, and there is this underlying kind of fear. When will inflation kick in? When will the interest rates kick in? And when will my actual currency be worthless? And where can I store my value? So it really touches on a lot of fears and anxieties I think that people have, and a bit of a frustration that monetary policy has now kind of reached the end of its tether. I think it was China wanted to have like an expiry digital currency, like you had to spend it in a certain amount of time, or you lost it. So it was to try to stimulate spending. Who knows what will happen in the next few years?
I'll just add to that. In Australia, Reserve Bank has put out papers on this. They're not looking at a retail digital currency, so something that you and I could use every day, but they are looking at a digital currency for international trade. So that's something they are looking at. But China is definitely the leader in this. And once China is now doing some pilots around what they call the digital yuan in different parts of China. And once that takes off, other jurisdictions will move quickly. So this is an area that's moving quickly. The European Central Bank is looking at this carefully. China is leading the way. So it's an area that's going to move very quickly. And part of it's driving it is also the concern around the Bitcoin and other sort of fiat competitors to our normal currency system. So it's a watch this space area.
Eleanor, I've got a question that will be dear to your heart. When are we going to get some serious tax reform, or is it just a bit too hard now?
I think it's Look, politically, it's difficult, right? You lose an election. Look at what happened to Labor at the last election. You know, look at what happened when tried to bring in, was it Houston with the GST? So, you know, power is determined by tax policies, and you're not going to necessarily stake your heart, especially when you don't have a conversation that brings people along and that the trade-offs are clear and that they're accepted by the majority. I think that Australians are particularly interested in tax, and they do vote on tax issues. So therefore, having said that though, it is hard because you've got state-federal fiscal relations. So you can't have serious tax reform until you talk about the GST. Now, if the states are not interested in changing that, you've got nowhere to move. For example, even something like imputation, where we're one of the last countries in the world to have an imputation system, taking that out means that superannuation funds, what's going to happen to them without their, you know, excess franking credits to get refunded? So that's why I alluded to system impacts and structural effects. Everything's quite complicated, which I think is why both politically but also economically it's very, very difficult. I think when the states are ready to come to talk about GST and the Australian people are on board with that, then maybe we can get some movement. But until then, it's so, where's the government got to move?
We live in hope.
We do, yeah, we're optimists, right? We live in policy land, so we're always hopeful.
We've got one question that gets a little bit more into the detail of some of the superannuation changes. That is, with the removal of the work test, will the tax deduction contribution continue under the same rules, i.e. can this be made irrespective of an account balance, whether it's above or below 1.6 million?
I don't know. I'm going to take that on notice, and I will ask Richard Webb, who deals with our superannuation. Look, there might be one aspect which is it's not in the details and it will come out, but there might be quite a simple answer. So I think maybe in tax news, I need to have reader questions and each week we answer them. But yeah, we'll take it on notice and get back to you.
If any of our listeners have further questions, I encourage you to pop them into the chat box now and we'll get straight on to those. So that everyone is aware, there are a range of budget updates and commentary available on our website, including CPA update and tax news, which went out in the very early hours of this morning, a range of articles on In the Black, and the budget podcast, which Eleanor mentioned, which will be available later today. Now, any last questions coming through?
Do you have one? Have you got it, Jane? SG.
Will the super guarantee ever be lifted or channeled into healthcare, the NDIS or aged care?
So there was chatter before this budget that maybe the legislated increase might not go ahead. The government is going ahead with it. So I think that, you know, those increases are coming. I think that debate has been settled, and particularly because our economy is in such good health. In terms of where it goes, that it's consolidated revenue, right? So it's not like the Medicare levy. So I think that they'll do with it. And I think those are good suggestions. Why wouldn't you channel it into the NDIS and things like that? So again, it's this really difficult thing because you've got an aging population, you've got really, you know, socially beneficial welfare programs, but they cost money. And you also want to have things like, well, SG, if I pay more, I'm fortunate enough to have enough super when I retire. I can afford to pay for my own healthcare or contribute more. You know, what are the trade-offs? So I think that it's an ongoing conversation. The goal is that people pay for their own retirement as much as they can, but obviously for those who can't, we need to look after them.
And there's also the retirement income review. So the government hasn't fully responded to that yet. So some of those issues, particularly around paying for aged care, so from your super balances, that might come up in the retirement incomes review.
Yeah. And just one last one before we pop off. We've got a question about Victoria. So first home buyer grant and stamp duty concessions. I think we might be fortunate enough to be getting a seat at the lockup this Victorian budget. So we will be working to let you know what the Victorian government might announce.
Yeah, but no announcements yet. It's only New South Wales is pursuing stamp duty And I'm pretty certain that government will do something around the first home buyers. But stamp duty changes, New South Wales is really leading the way on that.
One last question from me, if I may. We've had an expansionary budget now 2 years in a row. What's the likelihood that we might get a third, or do you think we'll see a move back towards something closer to austerity or at least consolidation?
I'll start with that. So, the Treasurer has changed the goalposts. So the last budget he spoke about, he'll move to a contractually budget or a normal budget settings when unemployment is below 6%, unemployment is below 6%. So he's changed the goalpost, and unemployment now has to have a 4 in front of it. I think once we get to unemployment with a 4 in front of it, I think the government will start to take measures to consolidate the budget. So I think this is the last of the really, really big spending budgets. And you have to remember that between now and the next budget, there'll be an election. So if the new government comes in, they'll have a good 3 years to actually do things. So I think this is the last of the really big spending budgets, unless there's a further COVID outbreak, a further COVID wave. I think this is really the end of the really big spending budgets, and we'll start to move into consolidation in the next budget.
And not to sound like a professional accounting association, but you got to pay, right? At some point in time, you can't keep spending and expect magic to happen. So it really is around, are you directing that spending in the right area, and who is going to pay and when are they going to pay? And we need to be conscious of future generations and just make sure that the choices that are being made are the right ones and that we manage things properly.
Well, thank you very much to all our listeners for your questions. And Gavin and Eleanor, a big thank you to you for providing your expert insight and analysis. As always, a lot of work goes on behind the scenes to make the magic happen. So I'd like to thank all the staff at CPA Australia who have been involved in today's webinar. From all of us here, we hope that the webinar has provided you with some valuable insights onto this year's budget. As I mentioned earlier, a large range of material are available on the CPA Australia app site. Once again, thanks Gavin and Eleanor, and I'll now hand back to Melissa.
Thank you, Jane, Eleanor and Gavin, and thank you to everyone for your participation today. In the next 3 working days, you'll receive an evaluation survey accompanied by the recording of this webinar. We really appreciate your feedback, as it is extremely valuable to CPA Australia to help us deliver better events for you. Thanks again, and we look forward to welcoming you to another CPA Australia webinar soon.